I'm Sean Gooden, and this is the feasibility analysis for global business consulting. Global business consulting is a niche firm that is built to grow in a smart, low overhead way by selling expertise instead of relying on heavy equipment or inventory. We specialize in delivering audit ready global leave programs to US based tech firms with international footprints. The market opportunity is strong for firms that can deliver measurable results, and the plan assumes the company will keep sharpening its niche and building repeat client demand. From an organizational standpoint, the main challenge is scaling, that is, people and processes, while keeping quality high. Financially, the pro forma statements show a profitable, cash strong business with improving efficiency and very low leverage, which of course supports our overall feasibility. And to that, we looked at four main areas: products and services, industry and market, the organization, as well as our financial statements. So let's start with products and services. This is a consulting business, so it's mostly selling expertise and time, not physical products. And that's a good thing because that means it can grow without needing a lot of equipment or inventory. As long as the team keeps delivering strong results, the service is very doable and scalable. As far as the industry and market is concerned, consulting is competitive, but there is steady demand for firms that can solve real problems. And these things do present real problems. This, of course, shows measurable impact. By year five, the revenue level suggests the market is there and the company is finding repeat business. The key, of course, is staying specialized and keeping our clients happy. When it comes to our organization, Global Business Consulting has a combined 60 years plus of operational knowledge on the founders team. Our CEO has 25 years in HR management and holds a Master of Human Resources. As lead general counsel, I have 15 years experience as an employee benefits attorney. Our other founders are just as well versed in this industry. The main operational challenge is scaling people and processes without breaking our quality or interfering with our quality in terms of our deliverable. Year five performance suggests that the company can fund growth internally, which reduces pressure to raise outside money. Going forward, our focus is going to be on hiring, training, and managing our delivery capacities. As far as the financial statements are concerned, from an overall standpoint, that is, looking across the statements, year five shows strong profitability, strong cash position, and very little debt. That combination is a solid sign the plan is financially feasible. The biggest thing to watch is making sure cash doesn't just sit idle or that billing and collections don't remain tight as the business grows. As far as our financial statements are concerned, let's look at the income statement first. Again, looking toward year five, in fiscal year March, or the fiscal year rather, of March 1st, 2030 through February 28th, 2031, which again is year five, the company brings in about 2.35 million in revenue and earns about 500,000 in net income. That is a net margin of a little over 21%, which is strong for a services business. What stands out is that the costs are not rising as fast as the revenue, so profits are growing with scale. Overall, year five looks like a business that's growing and staying efficient at the same time. When you look at our balance sheet, At the end of year five, the balance sheet looks very safe and liquid. Current assets are much higher than current liabilities, so the business has plenty of room to handle any surprises. And when you're dealing internationally, expect surprises. But debt isn't a big factor, so that keeps our risks low. Bottom line, the company has a strong financial cushion heading into the next year. When you look at our statement of cash flows, in year five, cash from operations stays strong because the business is yet again profitable and working capital is under control. Spending on equipment and tools is steady and reasonable, and somewhat a non-factor as there's not very much equipment required at all, which fits an asset-light consulting model like that of Global Business Consulting. The company can also pay owners distributions and still end the year with more cash. So year five cash flow supports both growth and returns to owner equity and ownership level. Year five ratios tell a clear story. Profitability is strong with a 21.3% net margin and a 47.3% operating margin. Liquidity is high with a 12.7x current ratio and a 12.6x quick ratio, while leverage is basically zero. Returns are also strong, with return on assets about 40.4% and return on equity about 43.5%, which suggests, of course, that our model scales well and is highly sustainable. That concludes our feasibility analysis, but we just want you to know for sure that Global Business Consulting helps US based tech companies with international teams design an audit ready global leave program that is compliant across countries, policies, payroll, and HR operations. Thank you very much.